All right, so Don was just hitting on some of the stocks that basically move with the price of crude. I want to ask you, we've seen a lot of price action in crude recently. What is your take on oil stocks and, obviously in the production exploration space right now with the idea that we are seeing Middle East tensions right now?
Yeah, so I think you've got a real push and a pull in the oil market. On the one hand, the fundamentals we describe as somewhat sloppy heading into 2025. You've got relatively soft demand, and you have the risk that OPEC may turn on the taps as we go into 2025. So paper balances do not look great. At the same time, demand, particularly in China, has been quite weak. Offsetting that is obviously all of the geopolitical tension. What we haven't seen so far is that geopolitical tension manifest in an escalation that will impact oil exports or oil production in any way. But that's the risk to the upside for the oil price. So we think investors are thinking about a mid case of $70-$75 Brent, but we get more and more questions on what do these companies look like at $60 or $50. So they're thinking about downside risk.
To that point, today, we're obviously following reports that Israel is considering what areas to strike in Iran. And we're being told right now that they're looking to avoid nuclear facilities and some other energy producing facilities. I want to talk to you about earnings season. I've been talking to guests about this here on the show quite a bit. For the Q3 earnings season, the S&P is supposed to see a 5% EPS gain year over year, but energy is supposed to be 25% lower with gas and oil and gas stocks going to get hit even harder. Oil and gas refining 77% lower, oil and gas production 17% lower. I mean, what's going on here? When we look at all this volatility, why are the estimates so much lower for this particular area?
Sure. So on the one hand, you have oil prices down a bit, as you and Dominic highlighted. The other aspect is the global gas market is healing from a very extraordinary shock in 2022. And it took a lot of time post the Russian invasion of Ukraine to sort of get prices closer to more normalized levels. So year on year, that's obviously driving headwinds to earnings. And then the real aspect of where the downgrades are coming from is in refining. And that largely relates to oil product demand. So gasoline and diesel demand, I mentioned in China, but elsewhere has been relatively weak. And that's really weighed on refining margins. You've also had new refining capacity come online, and the combination of more supply and less demand has been what's driven the earnings downgrades.
All right, I want to hit on some of the stocks that you're following them. One of them is BP. They came out with their trading statement last week. I want to get your take on what they had to say. They said upstream production for Q3 is expected to be flat quarter over quarter. They also hit on the fact that Brent's trading at a much lower level than it did in Q2 and Q3. It averaged 80, basically 34 a barrel back in Q2, almost 85. What's your take on Shell and some of these other oil companies? Just the fact they're coming out with their forecast and talking about their trading conditions, saying that they're not expecting a big boost despite everything we're seeing geopolitically.
Yeah, so there's really two themes that are coming across. One is the weaker refining margins, and that's impacting everyone to different degrees. So BP has more refining exposure to Shell, so it's getting hit harder. Exxon has more refining exposure to some of those, so also that will impact there. The second theme is actually that a number of companies are talking about more normalized trading. So you've seen 2022, 2023, and the early part of 24. Supernormal returns in these trading businesses as you've had exceptional volatility, and these companies have been able to take advantage of that. So that is going back to more normal levels, i.e. pre-conflict and pre-COVID. And we're starting to see that come through in the numbers as well. So BP highlighted on the gas oil side in particular that trading was weaker. Shell was more resilient, but it depends quarter to quarter.